Hi dear friends, welcome to Latest Wealth. Thank you very much for joining our online classes. I promise you, definitely you will get a wonderful benefit out of these online classes. I am trying my level best to share the wonderful knowledge which will be very useful for your investing. Actually, we are going to discuss about the stock market investment. Before entering into real details of stock market, I want to give some details about the importance of investment. Most of the people, they don't know the importance of investment and they don't know what is meant by investment, and a lot of people, they are not realized what is the importance of investing. Suppose if you are a parent and if you are already 50 years, you might be thinking, I should have done more investment in my younger age. The same thing when you start saying to your family members, they may not be listening. Yes? My dear friends, actually you can divide entire world population into three types of people. One is poor people, another is middle class people, another is rich people. You may be wondering, Kailash, what is the great thing you are saying? Let me tell you, my friends, why poor people are poor. You think it is due to their income. I say it is not due to their income, it is due to their money management. Why people are in middle class? That is also due to their money management. Why people become rich it's also due to money management. See, most of the rich people in the world, they are not born rich. Either they might have belonged to the middle class families or poor people. But how they become rich? And you would have seen some of the upper middle class people, after some time they have become very poor people also. Why it is happening? My dear friends, see, main is the spending habits, investment habits, saving habits, totally put together you can say money management habits. For example, just see on roadside coolie, whatever they are earning, they start spending. Have you observed? Most of the people, whatever they earn, entire thing they will be keep on spending on the same day. And some of the middle class people, they are having a habit of spending everything whatever they earn before the end of the month. Suppose 30 days they work, they'll get the salary. As soon as they get the salary, by 10th the salaries get exhausted. They say, I don't have much money. Then start depending on the credit cards, they start depending on the EMIs, right? Because they don't know how to manage the money. Let us come to rich. What they do is, rich, whatever they are earning, they don't spend fully. First step is they start saving the money, then they start investing the money. The difference between rich and poor is, poor people, they don't save the money. Middle class people, just they save and spend. Save and they spend. Rich people, they save, invest. Now let us see why you must invest. My dear friends, why every person should invest? Forget about the world, forget about the other relatives, forget about your friends, and forget about your colleagues. And most of the time what happens, why the people they don't save and they don't invest is, they want to first convince their family members, they want to convince the friends, they want to convince neighbors, they want to convince their colleagues. I say first you convince yourself, because it is your dream that you want to become rich, correct now? So first step to become rich is, as I was discussing in my programs, first is income. That means you have to earn. Second is saving. Third should be the expenses. Next is investment. After that, you start giving charities. Let me give two equations. Which equation is correct, you tell? Income minus expenses is equal to saving. The second equation, income minus savings is equal to expenses. Now tell me, out of this, which is correct, do you think? When I ask this question in public seminars, most of the people say, both are same only. Income minus expenses is equal to savings. Income minus savings is equal to expenses. What's the big deal in it? My dear friends, but it affects your mind. Most of the rich people, what they do is, first whenever they got the income, first they deduct the savings, remaining amount only they start spending. Whereas the poor and middle class people, what they do, as soon as they get the income, first they write down the list of expenses. Of course, some people even they don't write what are the expenses they have to do. They keep on spending. By within the 10 days of salary, they raise their hands. I don't have money. They start searching about where can I get the money. They want to run the show by taking the credits. They want to make the payments with the credit cards. Please don't go into the trap. Why you have to invest? Let us see. Imagine you are having a salary of 40,000 rupees per month. Just see, 40,000 rupees per month. And generally what happened? I have been asking people how much expenses you are making per month. Immediately they say 40 means, sir, 40,000 will go away. Even sometimes we need 5,000 extra or 10,000 extra. But my friends, if you want to become rich, first step is you must save. Let us go into very ideal condition. Of course, practically for some people it may not be possible, but the people who want to become rich, you must have some strong action, then you can become rich. For some people, let us imagine your salary is 40,000. Imagine your expenses are 30,000 per month. That means savings are 10,000 rupees per month. Yes? That means almost 25% you are saving. Please, I am saying in a very ideal condition. Imagine you are saving 10,000 rupees per month. Suppose you are not at all invested, let us say, because now a new generation, they are not interested in investing. They want to live in the present, and they think, however, my income keep on increasing. Now let us go into some 2-3 assumptions. 10,000 rupees as a savings. Imagine your boss is every year, he is increasing salary of 10%. An ideal condition. That means your salary is every year, suppose it is 40,000, next year it will go into 10% extra, that means 44,000 rupees. Same the way, let us imagine, now of course in India inflation is 8%. Let us say for next 30 or 40 years inflation is same and salary increase also same. Let us imagine, because for the sake of easy calculations. Yes, now imagine your age is 30 years. 30 years means you may work up to 50 years or up to 60 years. We don't know. And nowadays, the people, how the way they are living, not following healthy habits, not following good healthy habits, because they are not taking food properly, they are not taking quality of food. Most of the people are eating junk food and they are not properly sleeping, they are not doing proper exercise. With this condition, generally, when I say, can you work up to 60 years, people say, sir, I cannot work 60 years, sir. By 50 only I may retire. Of course, that will be the practical. Let us imagine you are working up to 60 years. That means you are having a period of total 30 years working period. Yes? And every year, let us make into one table. Just look at the screen and observe very carefully. Now, my dear friends, let us go with some assumptions. Your employer is kind enough to give you 10% salary hike every year. Next is the cost of living is likely to go up by 8% in a year. Next, you are 30 years old and plan to retire at 50. This leaves you with 20 more years to earn. Next assumption is you don't intend to work after your retirement. And one more assumption is your expenses are fixed. Of course, naturally it will happen. It may go up or come down. Now let us see what will be scenario. See here, I have done in a simple Excel sheet. First column is a year 1, 2, 3, 4, 5, 6, 7, 8, 9 like this. And we have continued for next 30 years. Because your age is 30 years, we assume for next 30 years you are going to work. See, your income is 40,000 rupees per month. So 12 into 40,000 is 4,80,000 rupees income. And the expenses are 30,000 rupees per month. That's why 12 into 30,000, that is 3,60,000 rupees. And savings, you can call savings or excess money or cash flow, whatever you call, that comes to 4,80,000 minus 3,60,000, that is 1,20,000 rupees. That means almost 20 to 25% of your salary, 20 to 25% of paycheck you are going to save. Now, as per our assumption, every year your salary is going to increase at 10%. 10% increment in salary. That means this 4,80,000 rupees will come into 5,28,000. 528,000. Next year, the third year, it will come to 5,80,000 rupees 800. Fourth year, 6,38,000. Fifth year, 7,02,000. Sixth year, 7,30,000. Seventh year, 8,50,000. Like this. At the end of 30 years, your income will be 76,14,295. Now let us come to expenses. We assume that expenses are 30,000 rupees per month. The expenses also we are assuming at 10% for ease of calculations for 10%. So total is savings 1,20,000, 1,32,000, 1,45,000, 1,59,000, 1,75,000, like this it go. By the end of 30 years, you will having a savings or you can call it as a cash flow, whatever it may be, it comes to 1.97 crores. 1.97 crores. That will be after 30 years. It looks like a big amount after 30 years. At present, if you think it looks like a big amount, but if you convert into present days, now that will be equivalent to purchasing power of 8,97,244 rupees. Say approximately 9 lakhs. Suppose if you start getting income, because in the traditional bank instruments, it's going to be only 6% per annum, because it will be only 6% per annum. So hardly you will be getting 7,000 rupees per month. So you will be getting only 7,000 rupees per month. Let me remind you, total amount at the end of 30 years will be 1 crore 97 lakhs or 1.97 crores. If you convert into real time, at present we can purchase the material worth of only 8.97 lakhs. Suppose if you keep this 8.97 lakhs in any fixed, safe and secured instrument, you will get only 7,000 rupees per month according to present cost. Now tell me, will you be able to live with this 7,000 rupees per month at present? If you get 7,000 rupees per month, this same the way now you are getting 7,000, at the time it will be more, but it will be as good as only 7,000 rupees. Now tell me, at that time, tell me when saving at this young age is better or old age is better? You decide. My dear friends, have you seen the table? Suppose your age is 30 years, you have worked for next 30 years, and at the rate of every month 10,000 rupees, that means 1,20,000 rupees per annum. So that if you keep on saving for 30 years, now table shows that you will be having 1.97 crores in your account. Please remember, it is after 30 years, not now. Just if you keep on saving without any investment. If you are not saving, then that will be zero. Some people, if they keep on using the credit cards, if they keep on taking the hand loans and all, then they may come into minus also. They may come into debts, they may be put into losses, they may go into physical strain, physical stress, mental stress, and the relationship may spoil in the house. The family may be quarreling with them, and they'll have no face to show to society. You might have seen a lot of people by taking a lot of loans and debts. They cannot pay EMIs, they sell off their houses, they sell off their vehicles. Because initially they want to show off as if they are looking rich, and at the end of the life they are crashed. Now let us see. Now when you save, keep on saving 10,000, that means 25% of your salary, you will be having 1.97 crores. You may be thinking, wow, 1.97 crores. My dear friends, suppose that amount is after 30 years. Suppose if you convert into today's rate, do you know how much it will come? 8,97,000. Now tell me, suppose you are having 8,97,000 rupees today. How many days you can live with the same cost of living? That means with the 8.97 lakhs today, hardly you can live for just 3 years only. That means as the time goes, cost index will keep on going, a lot of luxuries will start coming, and you see around 30 years back what was the cost of living, now what is the cost of living? Because unnecessary items have come and occupied. We cannot say unnecessary items, but unnecessary items have become necessary items and must item for now. For example, if you take 20 years back, there was no internet, so no need of paying internet fees, no mobile phones, hardly around 40-50 years back, no televisions, not that much televisions, no cable charges. Like this, some extra costs have come. Same the way after 20 or 30 years, tell me, extra cost will be more or less? Naturally, it will be more. So that the 1.97 crores, what will be in your fund? Suppose if you keep on spending simply without saving anything, so you can survive only for 3 years. Now tell me, now you say that I don't want to save, I don't want to invest. Do you think after 60 years you want to invest? It's very difficult after 60 years getting the income and saving and investment, because already your mind has conditioned to spend more, to spend more, spend more. The 30 years habit you cannot break at one moment. That's why most of the people, when their children are getting married, they will be put into debts. They sell off their houses, they sell off their jewelry, they sell off their properties, and for children education, they'll be taking education loan. That means you are making your children to once again start their life with the debts. Now let us see, you are having 8.97 lakhs. That means 1.97 crores equivalent to 8.97 lakhs. Suppose if you keep in the bank at the rate of 6%, let us imagine 6% every month you are getting income. That means how much income you will be getting? Approximately around 7,000 rupees per month. Now tell me, at present situation, if you get 7,000 rupees per month, can your family will survive? Can you survive? That's what you think. 1.97 crores at that time, the interest rates and all, if you calculate according to present situation, it will be equivalent to only 7,000 rupees per month. Now tell me, can you survive with the 7,000 rupees? Now itself your salary is 40,000 rupees. You are saying that 30,000 rupees expenses. Where the person who is spending 30,000 per month, can he survive with the 7,000 rupees? Highly impossible. And one more thing, now you are young, because 30 years age only. After 60 years, we don't know what will be your physical condition, what will be diseases, new diseases, what will be medical expenses, and you may not be having that much stamina what you are having now. So, one is you must invest. How much? How to invest? Let us go and start. My dear friends, let us imagine you are a very spendthrift. One of your friend is saving something and he started investing. And I am not saying you need to invest a lot of money. Just 50,000 rupees per annum. How much? Just 50,000 rupees per annum. Please remember, your annual income is 4,80,000. That means 40,000 into 12, that is 4,80,000 rupees. Earlier you are saying 10,000 rupees per month you are saving. That means total 1,20,000 rupees is the saving. I am not saying entire 1,20,000 rupees you have to invest. Out of that, approximately 50% of the amount. That means approximately 10% of your salary. 10% of annual salary. That means 50,000 rupees per annum. Per annum 50,000 rupees. If you start investing, let us imagine at the 18% of compounded interest. I am talking about compound interest. I am not talking about simple interest. Compounded interest, which is annually compounded. Really, there is a power of compound interest. I am going to prepare one more video. Please watch it fully so that you can understand fully. But unfortunately, most of the people, without knowing the fundamentals, without knowing the basics, without knowing the knowledge, without having a right proper guidance, without having the strategy, without having a plan, without having any goal, without having any system, tools and templates, simply people start investing in money in different instrument. The instrument may be whatever it may be instrument. Some people invest in real estate, some people in the cryptocurrency, some people in stock market, some people in commodity. I say never invest blindly. First you have to calculate. Now let us see. Suppose you started investing 50,000 rupees per annum at the rate of 18%. But one thing, every year you have to invest. Now let us see how the calculation will turn into magic power. You'll wonder to see, wow, definitely, just observe. Now let us see, I'm taking the case of, suppose my daughter, now this year is 2019, she is going to save till her retirement. See here, this is 2019, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, like this. Left side is the year column. So I am typing here year. Here I am taking the inflation of 8%. That means in 2019, suppose 1 rupee is something, next year it will become like a 1 rupee 08 paisa. In 2021, 1 rupee 16, 1.1664. 2022, 1.259712. Like this, the inflation will keep on raising. That means it will help you to calculating the purchasing power. See, suppose in 2019, one particular item price is 1 rupee. Suppose same item if you want to purchase in 2029, that is exactly after 10 years, it will cost you 2 rupees 15 paisa, say 2 rupees 20 paisa. That's the reason I have calculated inflation here. Imagine she started investing 50,000 per annum. That means per year. Roughly it will come to 4,500 to 4,800 rupees per month. So 50,000 rupees per annum may not be a big deal. See here in 2019, let's imagine she has invested 50,000. So here financial security, I must invest 18% compounded, so that next year it will come to 59,000. The same amount it will turn into 69,620. 2022 it will turn into 82,152. In 2023 it will turn into 96,939. In 2024 it will turn into 114,388. Like this, every year 18% growth, that is compounded annually. This amount separate. Next year in 2020, see here in 2020, once again we are investing 50,000. 50,000. So that what she invested in 2020, by 2021 it will become 59,000. In 2022 it will become 69,620. In 2023 it will become 82,152. In 2024 it will become 96,939. In 2025 it will become 1,14,388. Same the way in 2021 once again 50,000. 2022 once again 50,000. 2023 50,000. 2024 50,000. 2025 50,000, like this. Every year 50,000 only. Just if she keep on investing every year, by the time of her retirement, see here First amount what she is invested 50,000 has become 3.7 3 crores 75 lakhs 18,917. The second year which she has invested, it has become 3 crores 17 lakhs 95,693. Same the way this is 19, 2020, 2021, 2022, 2023, 2024, 2025, 2026. Like this, it has come to amount. Only we are imagining that she is invested only up to 2030 only. My friends, she has invested up to 2030 only, not for all the years. That means just she invested only for 11 years. Please remember, only for 11 years. She invested only for 11 years. Please remember, by the end of 11 years, total she will be having 20 crores 61 lakh 32,169 rupees just for investing only 11 years. Please remember, she is invested only for 11 years. In earlier case, the savings for total 30 years. Here investing is only for 11 years. Please remember, here in this case, savings, only savings for 30 years. Here she is invested only for 11 years. By the 11 years, she will hang 20 crores in her fund. See that 20 crores in her fund. You may be wondering, 20 crore after 30 years, what will be the value? But if you convert into current year, it will come into almost 94 lakhs. That means 94 lakh rupees, so that she can get minimum annual income around 6 lakhs per annum. That means she can get the pension of 50,000 rupees per month related to present. That means if you get 50,000 rupees per month, happily you can enjoy. Here you are investing for first 11 years only. See the magic of power of compounding. That's why we say you must invest. My dear friends, have seen the calculations that we have done in Excel sheet. Same the way you can start doing the Excel sheet calculation, very simple calculations. For that you need not become Einstein, you need not become Sir Isaac Newton, you need not be a chartered accountant. Simple calculations, how we have calculated is very easily. What I did is 8% inflation I have taken into consideration, and every year you are investing 50,000 rupees per annum at the rate of 18%. Now see, this actually I have calculated for the sake of my daughter. Now she is 20 years old. Let us say she works till 2059. So that what will happen in her account, if she keep on investing only 50,000 rupees per annum, I am saying, because investing 50,000 per annum is not at all a big issue. So that by the time of her retirement, she will be having approximately 20 crore rupees, approximately 20 crore rupees in her account. That means you may be wondering, 20 crores after some 30 years, now sir, 30 or 40 years, then what is the use? Let me tell you my friends, that 20 crore rupees, if you convert into present times, it will be almost equivalent to 94 lakhs. These 94 lakhs, even if you save at 6% returns, simple interest, 6% interest also, you will easily get 50,000 rupees per month. Now tell me, for aged person, 50,000 rupees, if he gets like a cities of Hyderabad, Chennai or Mumbai, even Delhi also, comfortably he can lead the life, no? Yes, that is called planning. Now let us go into some other calculations. Suppose instead of 50,000 rupees per annum, you are into some little bit higher level. If you are able to afford 2 lakhs per annum. That means 200,000 rupees per annum. What will be the picture? Let us take my daughter's case only. Suppose if she start investing 200,000 per annum at the rate of 18% compounded interest, let us see. Of course, my friends, don't go exactly into this calculation. Some of the assumptions were made because we are thinking every year 10% salary is increased, inflation is 80%, and in between I am not considering about the income tax. I am not considering about some other things. Just we are going in an ideal situation, right? Let us see what's going to happen. Just observe the screen. My dear friends, in earlier case we have discussed, if my daughter saves 50,000 per annum, the result was like this. Alright? The result was she will be having 20 crore rupees in her account. Now let us see, suppose instead of 50,000, she starts saving 200,000 per annum. That means 2 lakhs per annum. Because earlier I have seen, this time I am going little bit fast. See, in 2019, the first year 200,000. So by checking out the inflation, it will come into 1.08. Next 1.164, 2020 to 1.29. This is the inflation calculation. That means if you are purchasing at 1 rupee, next year it will cost 1 rupee 08 paisa. Same thing, it will come to 1.6. Now let us see, suppose she is invested 200,000 at the rate of 18% annually, it will come into 2,36,000. Then it comes to 2,78,000. Then it comes to 328, 387. 457, 539, 637, 095, 751, 772, 887, 091, 1046767. Like this, it will keep on growing by the 2000. Just one time she has invested and keep on reinvesting. Please remember, she is reinvesting once again. By the end of 2050, that 200,000 will become 15 crores. My friend, 15 crores. Now let us see what about other amounts. Like this, in 2020, she is invested 2 lakhs. In 2020, 200,000. In 2022, once again 200,000. In 2023, once again 2,000. Like this, if she keep on investing, and please remember, she has not invested for all the years. She has invested only up to, I will show you, the year is only up to 2029. Up to 2029 only. See here, we have calculated up to only 2029. After 2029, she has not at all invested anything. Just for first 11 years, she keep on invested 200,000, 200,000, 200,000. By the end of the only 11 years, please remember, that means 11 into 2 lakhs. That means hardly 22 lakhs she has invested. Total investment is only 22 lakhs. Now see, by the end of the year, she will be having 82 crores. You may be wondering, 82 crores? Then what is the value of present value? See, at the end of 2059, by the time she retires, she will be having 82 crores 45 lakhs 28,676. Now if you turn into present cost, it will become like a 3 crores 79 lakh 53,824. That means approximately we can make it as a 4 crores. That means which can generate minimum. Even though you put in a very safe and secured investments, you will start getting 24 lakhs per month. That means monthly pension of 200,000. That means 2 lakhs per month. Now let us see the verification between 3 cases. First case, he saved. When he saved, in his corpus he will be having only 1.97 crores, and he can get only 7,000 rupees per month. Suppose if she starts saving 50,000 rupees per month, she can get 50,000 rupees per month. Now, only for 11 years, please remember, if she starts saying 200,000 per month, for 11 years, at the end, she will start getting same 200,000 per month. Please remember, this 200,000 is not the present value I am saying. That means at this particular moment, you can get 200,000. That is the difference what you are going to get. Now let us see the difference. Suppose one person only saving for 30 years. He will have corpus fund of only 1.97 crores. That will be equivalent to 8,97,000 rupees in 2019. And he can get monthly pension of only 7,477 rupees. Whereas same person, if you start invested for next continuous 11 years, just 50,000 rupees per annum, just invest 50,000 rupees per annum, by the end of retirement period, he will be having, it will come into almost 94 lakhs, and so that he can get income of 50,000 per month. Same person, if he started investing for 11 years, 2 lakhs per annum, he will have a corpus fund of 3.79 crores, so that he can get monthly pension of 2 lakhs per month. Let me remind you, if one person is saving, continuously save for 30 years, he will have 1.97 crores as a corpus fund, and it will be equivalent to, at present cost, it will be as good as equivalent to almost 8,97,000. So that he can get the pension of 7,477 rupees. Whereas instead of that, if you start investing for 11 years at the rate of 50,000 per annum, at the rate of compounded interest of 18%, then he will have 94 lakhs in his account, so that he can get 50,000 per month. Suppose he invested 2 lakhs per annum, so that he can get amount of approximately 4 crores, he can have 2 lakhs per month pension. Now tell me which is better. Only saving so that you can get the pension of 7,000. Invest for 11 years 50,000 per month so that you can have pension of 50,000. Invest for 11 years 2 lakhs per annum so that you can have 200,000 per month. Now you decide. Only saving is better. Invest. My dear friends, have you observed? Suppose my daughter started investing 2 lakhs per annum. By the end of her retirement, she will be having nearly 82 crores. Wow, such a great amount. 82 crores just by saving and investing 2 lakhs per annum. That means approximately 10 to 12,000 rupees per month. 12,000 rupees per month if she saves. Now let us see, at the time she will be having 82 crores, right? You may be thinking, oh, 82 crores. 30-40 years may not be that much value. What is the value of present value of 82 crores? Suppose if you convert into, by taking the inflation into back calculation, it will be almost equivalent to 3.79 crores in your bank account. Now tell me, how many days you can survive with the same present cost of living? My friends, that 3.79 crores, imagine you are having at present. Let us go and put in a very safest investments like a bank FD, fixed deposit, or something very 100% secured. Then also every month you will be getting approximately, let us say around 6% per annum also, you will be getting around 2 lakhs per month. Yes, that's the reason I am saying, my friends, you must invest. Where to invest, how to invest, what to invest, what are the steps of investment. Already we have prepared some of the videos in public YouTube channel. Please watch it. And for my workshop participant, we are going to do next episode with a clear calculations how to invest in stock market and what are the before going to the next session, what we are going to deal in coming sessions, let me tell you. One is the need to invest. Why should one invest? Next, where to invest? Fixed income instruments, equity, real estate, commodity or bullion, and what are the things to know before investing. Second chapter will be regulators. What is stock market? Stock market participants and the need of regulate them, the regulators. Next, financial intermediaries. Overview, the stockbroker, depository and depository participants, banks, NSCL and ICSL. Next, IPO markets, overview of the IPO markets, origin of the business. Next, IPO markets part 2 also we are going to deal. Why do companies go public? About the bankers, IPO steps, generally what happens after IPO, few IPO terminology and recent IPOs in India. Next, stock markets, overview, what really is the stock market, what moves the stock market, how does the stock get traded, what happens after you own a stock, and about the investing period, how you can calculate the returns and where you can fit. Next, indices of stock market, overview, index, practices and some other terminologies. Like this you will be learning a lot of things, and fundamental analysis, technical analysis. What is the importance of fundamental analysis and technical analysis? Where you have to use fundamental analysis, where you have to use technical analysis, and what are the important precautions you need to take about stock market investing. And something we're dealing about income tax rules also. Hope my friends you have enjoyed the session. Please, if you are unable to follow, watch 2-3 times. Then let us go into next session. Until you understand this session, please don't go to next session. And thank you very much for watching. Till we meet again. Enjoy every bit of life. Have a nice day. Bye bye. And Kailash is logging off. Thank you very much.